Good morning. This is the Elliott Wave weekly update for the NASDAQ 100, being recorded on Saturday, August the 2nd at 11:45 a.m. Pacific Daylight Time. I'm going to start here on the NDX. I'm on the largest picture that I have, or the most data that I have, uh, for the NASDAQ 100 index. And this particular chart goes back to 1985, which I believe is the date when the NASDAQ 100 started. Previous, there was the NASDAQ Composite, but this is the NASDAQ 100, which is built around the tech explosion that actually happened in the mid 80s into the late 80s and still today. So it's everything tech. Okay, so what I have on a large picture, it doesn't reflect the same as in the S&P or in the Dow. And those two indexes, of course, have been in existence for decades longer than the NASDAQ. So therefore, I have started, and instead of being on a cycle level, I'm doing it on a primary degree level. Now, that could get bumped up, but I'm not ready to do it just yet. So right now, what I have is from the start, I have a primary wave one, primary wave two, and we're in a primary wave three, which I believe could be close to completion. So let's start from there. What's going to be within a primary third wave? 5 waves of intermediate degree, of which we have one, two, three, and four labeled as complete. So taking it down out of the monthly, I'm going to bring it right down to the 5-year weekly chart where we see intermediate wave three, intermediate wave four, and that was October of 2022. So from that level, we're involved in an intermediate fifth wave, which will consist of 5 waves of minor degree, of which we have minor one, two, three, and four complete. So we're within a minor fifth wave up, which will then complete intermediate wave five and primary wave three. So it's 1 degree lower than we see in the SPX and the Dow. Okay, so I'm going to bring it down to the daily now, within minor wave five, where are we? It'll consist of 5 waves of minute degree, of which one, two, and now three are complete. So we are now dropping lower in the beginning stages of a minute fourth wave correction. After wave four is complete, we still have a minute fifth wave back up. And by my estimation and by my calculations, we should go again to new all-time highs. So what's kind of bringing all this on? There are a lot of things. Right now, there's a great deal of talk about the tariffs and the deadline was August the 1st. The deadline came and went. We saw some agreements being put into place. We see additional threats being made against particular countries that are not living up to the standard that our current administration would require. And so there are additional threats being put out to countries like India for importing Russian oil. And whether or not those threats are kind of pushed through, I don't know. How that will affect things, I don't know. But I will say there's a very interesting article that I'm going to include the link within the description section here on YouTube so that you can go in, you can then copy and paste that link and get a very, very well written description and just some history and just some facts about U.S. trade policy. How it really does it have an effect? Do the tariffs have an effect on the economy? Is the current or now the past trade agreements, the trade deals that the U.S. had, does it really suggest that the United States is being skunked or the United States is being taken advantage of? And the answer, blatant, positively, is no. So based on all of that, what we really are dealing with is just working through everything that's going on and putting in its right perspective. So the real gist of this article is, are the tariffs helping or hindering the U.S. economy? And I'll leave it to everybody else to make your own decision on that one. But that's what we're dealing with right now. And so there's a lot of talk about the bloodletting on Wall Street, the bloodletting in the markets because of the renewed tariff agreements, conversations, effectiveness, etc. Um, my own personal opinion is that, well, prior to that, and since we reached our high, which was a new all-time high in the NDX, in the NASDAQ, we reached that on Thursday, the 31st. What also was happening on Thursday? It was the monthly turn. So in other words, the July expiration, July 31st expiration, which was a big expiration in indexes and ETFs. The stocks, the underlying themselves, they had their weekly expiration again on Friday, August the 1st. So we had two large expirations where positions are getting rolled out or closed or traded to a point where they're going to be monetized during the day. So they were wild and kind of almost woolly expirations on both Thursday and Friday. We reached that high for minute wave three in all the markets on Thursday, pretty much on the opening. And that just allowed large trading firms or traders to monetize what they needed to get monetized, to put into place what they wanted to be put into place, possibly in the stocks, but more likely in the ETFs. Those are the spiders, the Qs, and the NDX, the NQ, the SPX, the ES, all of those, any of the ETFs that are wrapped around that had an expiration on the 31st. Now, what else happens here? We see a lot of gamma disappear. Why? Because it expires. So that presents us with another, not necessarily a challenge, but what is possible to happen? Well, we saw for the longest time volatility getting annihilated, right? We saw volatility drop and drop and drop and drop and drop. In fact, the VIX itself, I saw below 15. That's pretty dramatic. And so I know I mentioned it a couple of times. I know others that write and speak about volatility also mentioned, let's all be very careful here. It's not going to take much before we get a sudden spike in volatility. Now, usually that's the fear gauge, right? So it's fear of the market's going to go down. Well, we were number one, overbought across the board, particularly here in the NASDAQ. We were overbought, which suggests we're going to get a pullback. And the fact that volatility was as low as it was suggests that it's going to happen fast. And that's exactly what we got. We got a quick slice and dice on prices, bringing things down. And as a matter of fact, we had on Thursday afternoon, Apple and Amazon put out their earnings reports. The day before, we had Meta and Microsoft. All four did not necessarily blow the doors off. I think Microsoft and Meta, if we had to say, did anybody blow the doors off, those two likely would be considered very strong earnings, whereas Apple and Amazon beat their estimates, both on a per share basis and on a revenue basis. They beat the estimates that were put out there, but yet those stocks went down and then got hit a little bit harder on Friday. Why? Expiration. Expirations. Not so much on Thursday because that's when those earnings came out, but more on Friday. So that doesn't necessarily jive with, well, those earnings weren't that bad. True. And we might see on come Monday that we get a bounce in those stocks. Why? Well, a lot expired and went off the boards on Friday's expiration. First of all, on July 31st, and then again on August the 1st in terms of Apple, AMD, Amazon, Broadcom, go down the list, Meta included. We saw Meta drop 23 points on Friday. Well, didn't they just have to run this thing up on Thursday? On Wednesday? Yes, they did. And they held it higher on Thursday as the rest of the market dropped. Well, that was all just for that expiration. Then we got into the roll. So what I'm basically saying is that quantitative trading has produced a whole new world on how we deal moving into an expiration and how quickly algorithms can trade up and down, getting themselves in position or the traders into a position ready for an expiration. That's what took place in my view, along with the fact we did have tariffs. We did have an overbought. We did have a lot of situations, but I think a lot of that, again, was into that expiration. So what might we see tomorrow when Globex opens, but then also on Monday, once the options pick up again, we could see some follow through to the downside. And on an Elliott basis, I'm going to show you very quickly how that fits. So let's kind of jump in, take a look at the Elliott wave picture for the NASDAQ for the cash market. So here we have minor wave 5 still in progress. Excuse me. Minute wave 3 completing on Thursday. So on Thursday at the open, pretty much. So I can bring this down. So there was the 3. So we're into a fourth wave. Now, first thing that not so much here in the cash because I didn't do it. I don't do it on daily, but it was effective here as well. But in the futures market, I shifted this third wave, which was here, back down to its original position. Those are the minuet third and minuet fourth. And once this got put into place and we started to nosedive off of it, I realized that this still could have been, it still was a fourth wave, but it was a fourth within that ongoing minuet fifth wave up. So made my adjustment there, which lines up our fib for wave 3 or wave 4 into alignment with the current fourth wave. And what I'm going to do right now is here on the, where am I? Add a drawing. And I'm going to put this box right here. I'm going to color it in so that we can see what it is. There it is, the fourth wave of one lesser degree. Remember what Elliott teaches, taught, and continues to work with. A fourth wave in progress will find its terminus, its endpoint within the fourth wave of one lesser degree. We're dealing with a minute degree fourth wave. It's going to find its terminus, its endpoint within the fourth wave of minuet degree, one lesser degree, and that's this one right here. And that lines up cleanly with our fib support for this fourth wave, which comes in from 22,177 down to 21,301, with the low actually coming in at 21,552. So that's kind of what I'm looking for. Coming down into there, possibly on some overthrow, getting out 200 points lower, and that would all fit within that fourth wave. Once the fourth wave is done, I'm going to be looking for it to turn and to rally back again to new all-time highs to finish minute wave 5 and minor wave 5 and intermediate wave 5 and likely primary wave 3. Okay, so what's going on? Let's drop it down to the hourly chart. Let's see how is this fourth wave beginning to come through. Well, there's the 5, the 5, and the 3, minute wave 3. I have 1, 2, 3, 4, and we still have a fifth wave yet to come. Now, what does that tell us? Well, the nature that this is falling is that it's likely going to be a zigzag. So in other words, the A wave will be 5 waves, the B wave will be 3, and the C wave will be 5 waves. Will that just finish wave A, or could it possibly finish all of it? Well, I'm going to say it could finish the whole thing. Why? Because of the distance that's being taken on this initial A wave down. Now, what else does it tell us if we're actually getting a zigzag? So we get 5 waves down to complete wave A, which I believe we will. What does that then tell us? That it's the whole structure itself for minute wave 4 are going to be a ABC down, but it's going to be 5, 3, 5. And that, go back to that daily real quick, that does get us into position that we're likely going to get back down to here to here. I'm going to use 21,300 as my marker for right now. And that I think is going to complete minute wave 4. What can minute wave 4 not do? It cannot come down and invade the price territory of minute wave 1. So that's all the way down at 19,234. That's the high of minute wave 1. It cannot cross it. We have plenty of room coming down to 382. So that's what I'm looking for there. Going back down to the hourly chart. Inside now, I got 1, 2, 3, 4, which means I still have a fifth wave to come down. Put in some fibs and as wave 1 and wave 5 are related. And so most common, right, is that wave 5 will equal wave 1, and that marker is 22,502. That is where wave 5 will be 100% of wave 1. Next up, second most common, 1.618, which is 22,246. That one seems more doable, and the reason is, if I'm counting here, this likely is 1, 2, which means you have a third coming down, a 4, and then a 5. Now, that all can happen right into there, but wave 1, I don't know. Wave 1 is 22,918 down to 22,006. About 300 points. And if I come up, and wave 3 should be longer. So let's say wave 3, that's here, is 22,005. So yeah, wave 3 could be here, but it's just going to equal wave 1. So I'll look for a little bit more. So somewhere in between here or all the way down to here. Now, once that's done, I get a 4 and a 5. Within the wave 5, I get a 1, 2, 3, 4, 5. So I think if we get down to there, then I'm going to put wave A. We'll run additional fibs from the high down to the low for wave A to get our markers for wave B, which will be an ABC. But here we are again, that we're going to be looking at the possibility for this B wave, what the structure could look like. There are 13 different variations for this B wave. Could be just a simple ABC, three of either a 535 or a 3335, which is just an A wave is an ABC, the B wave is an ABC, and the C wave will always be 5. It could be that, could be a triangle, could be a double ABC, could be a triple ABC, could be a WXYZXZ, a WXYXZ. We've seen those in a B wave position. So a lot of different variations as we put in this ABC up to put in the minuet B wave, right? So we're coming down to finish minuet wave A. We'll go back up on a B wave. I think it's going to take some time, and there'll be a lot of sideways moves, in my opinion, but it should come out at an ABC. We'll put a minuet wave B there. Then we get a minuet C wave down. And that one, well, could bring us down to 21,000. Let me go back out to that daily real quick. Could bring us down to that 382 because there's the marker. There's the box, previous fourth. So we're going to be inside there. Maybe a little bit of throw over takes us down to 21,300. And from where we started, pretty big. 23,589. 21,300. 2,000 points. So it's a lot. Actually, not 2,000, but it'll be close to 1,500. 12 to 1,500 points. That's pretty big for a fourth wave, but it's because we traveled so far. So moving averages. Let's look at the hourly. It's showing a little bit different. You can see the hourly, everything. Now we're in alignment. Well, sort of. In the NASDAQ, we still need to see the 30 and the 78 get below the 200. Then it's going to in alignment to go down. So it's not quite there yet. So what do we got going on? What do we really want to look at? If I move it back out to the daily and we look at the moving averages, they're barely affected yet. Even with that big gap that we saw on Friday, the eight's turning lower. The 20, excuse me, the 30 is going sideways around 22,763. I don't think that'll last because we closed just above it or at it, to be honest with you. So I think that if we open down tomorrow, which would force the cash market to open down on Monday, that'll turn. This, I believe, will go flat, 21,862, around in that area. The 200 is going to go flat around 20,950 area. These will go flat. Those will be providing support. On the daily chart, those will be providing support. What are we looking for? Possibly 21,301. So it'll be that after the B wave, we come back down, they'll start to reflect that. But I don't think they'll start to break, at least the 78 and the 200. I don't think it'll be broken on this particular move. That keeps it in that fourth wave position and also keeps a more positive spin towards a fifth wave happening. We're not getting the internal breakdown. A lot of reports of blood on the street, et cetera, et cetera. Okay, great. It is. But now we get a little bit idea as to why. It's not the end. It's just a correction, in my view. Now, I also need to state that if we're really looking out on this thing and we're going to see what else could we have, there is the possibility, folks. I think I can do it off of this one. Yeah, there is the possibility. Actually, I can do it off the daily. I'm going to show you something. If we start looking at this, and I just put up, and this goes with the alternate count, which I put up back up on the shelf, but I remember that it's showing it, and that is that this fourth wave is not yet complete. Let me show you that. If we just go and we add a simple fib, and I add to this top side 1.236. Yeah, come on. 1.236. All right, you're on, but let's do it again. 1.236. And then I don't think I got 1.382. I'm going to take all the rest of them off because we don't need them. And let's see what we got. Look at that. 1.236 met on the nose. We got up to 23,589 and that came in at 23,571. So pretty much on the nose. That got hit. 1.236. Irregular B wave. A, B, C, yes. Could be. And if it is, what does it suggest? We're going to come flying through these. Okay. That's going to be key. In the NASDAQ, that is going to be key. If we don't slow down, if we don't come down and find our wave patterns to be consistent with what we're looking for, then we're going to have to pull this back off the shelf and take a more serious look at it, because what does it suggest? And I'm going to show you that. We're going to take that one off and put in, if this is A and this is B, and here is, this is the B wave up here, what is that C wave looking at? 14, 17, 14, at least down below there. That is much more than what I'm looking for right now under the current count. So this remains on the shelf, but in all fairness, because of what level it reached, I'm including it. I'm saying it's back on the shelf, but it's kind of sticking itself out a little bit to say, pay attention to me. So I'm presenting it. It's here. It's not dead. It was never dead. I'm continuing to follow it. And the message is much deeper correction before we do a rally back up. So remember, if it's the minor fourth that's still engaged now, yes, we're going to see wave down and it's going to be devastating. But what comes later is that surge, which could take us right through the end of the year. Remember, we got time factors working. We got a lot of stuff going on. We have algorithms that continue to suggest a surge higher into December, at least into the fourth quarter, which begins at the end of September on October 1st. We're into the fourth quarter. So either we get it in October or we get it into December, one way or the other. That's all the fourth quarter. So if we're still seeing that, which I did, I checked them over yesterday, they are still discussing and showing, yep, that's still available. That's still out there. That a major top could be reached in the fourth quarter. And that would certainly fit here if it was a total, all of minor five, instead of we're involved with minor five now. If it's all of minor five, well, we got a lot more downside to do before that were to begin. And it would be a turn well worth being long for. Let me just say. Now, I'm not saying that that's what's happening. We're keeping an eye on it. We got a lot going on here, and we have a lot more that we can come down before that would take over. A clean break below 20,600 on the daily, even a break below that 200 period moving average would really begin to suggest it's not this. It is definitively, and then it's going to be a C wave. And the C waves are fast and powerful. They're like third waves. We got that here going up. Just think of this going in the other direction. So all of those strong rallies would be the strong declines. And people are really concerned right now, I have to tell you, some traders, because look what we got. We had 2 days of strong declines. The NASDAQ on Friday finished down 454 points. The Dow finished down 542 points. The SPX, they've already taken it off. God bless them. But 62.38 was the close, so it was down over 100. So those are all pretty strong. So again, could it happen? Well, yeah, it can. To say no, never is not smart. Not smart. So yeah, it's an alternate. It's not what I'm expecting, but be prepared should it occur. Be able to recognize the signs of what is breaking out, breaking down in front of you. Don't try to disregard them. Pay attention. That's all I'm going to say. Pay attention and have your strategy in place if these levels get taken out. Okay. Because again, folks, I'm a day trader. I'm a day trader. I really just want to get the day move. I want to get the first hour's move because things get a little screwy and be after that, particularly in the NASDAQ. You got a lot of push-pull going on. They like this stock. They don't like that one, this one, that one. If it is indeed a C wave, they're all going to go. There'll be no push-pull. It'll just be straight down. Take the hints. But as a day trader, I want to take advantage of them. There's a lot of money to be made on an exit. I got to tell you, in a panic. All right. Now, enough said about that. I will be paying attention to it. You will be hearing a lot about it should it occur. Okay, let's go over and take a look at the futures market, which of course, all those gaps are filled in, which is nice. So everything's the same. There is the minute third wave. We're coming down in the beginning stages of the fourth wave. A little bit now also counted out. 1, 2. I mean, this was difficult. Don't get me wrong. The count was a little bit difficult. I had to go over to the cash market and I had to do it on, pulling it in and using the line charts to kind of get where everything, excuse me, wow, where everything was for the indexes. So here we have 1, 2, 3, 4, and we have 5. So I'm leaving the 3 here. And I probably should raise it up just a little bit so not to tell you that it really belongs there. Because what I'm thinking, 1, 2. If anything, A, B, and we got a C wave, it'll come up above there and then we'll drop. But right now, I think the 4 is in place. 1, 2. We got a 3, 4, and a 5 to do. So same measurement. wave 1 to get our measurements for wave 5. Most common, wave 5 is equal to wave 1. That comes in at 22,501 in the futures market. We have additional support, fib support at 22,384. Flipping out to the daily, let's take a look and let me put the box in. And right there, we're going to add this box. And it goes actually small this time, very small. And I'm going to edit and put this in the minuet degree. And there it sits, and that low is 21,566. We have 21,481 is 0.382. That's the most common for a fourth wave. So we got a lot more downside. But we went through that one. And that was also helped me decide that, okay, that, which is a wave 2 now, got taken out by that. So here we are. 1, 2, 3, 4. We may go up, but then come back down. I think this is a 1, 2, so I think we just start by coming down tomorrow, and then maybe gap on the NDX. But be careful if we start to reach these levels, because I think we could get a spike, a V bottom, and start right back up in a B wave. And B waves are notoriously fake. They're unbelievable. They're like, wow, look at this bounce. This must be really, we're going to go higher. We're going to go higher. And suddenly they stop because they're a B wave. So the personality is deceptive. Deception is a part of their characteristics. So again, we'll get a B wave. And as I just explained over in the cash, same deal for the future. It can come in one of 13 different variations for a B wave structure, corrective structure. All right, but here we have them. First up, I leave that 618, might find some support, 22,709 down to 22,700, might find some support there. Could it finish wave 5? I don't think so, but stranger things. So that's our first line, 22,709. But most common, 100. Second most common, 618, 22,163. Where's that 382? 21,481. So we got quite a difference between 1.618 and that 382. So I think in the futures market, we might come in right there. And then we get the turn. So 1, 2, 3, 4, 5. It's still from 22.8 to 22.1 at 700 points. And trust me, we could do that on Monday. We could do that on Monday. Combination tomorrow, Globex, and Monday. We could be down here. Finish this A wave and start the B wave. Now, the other thing to kind of keep in consideration is like for a minute fourth wave, we're looking for this to take more time. This A wave's unfolding. So far, that's 2 days, folks. 2 days from there to there. That's pretty fast. So I'm thinking, wow, this A wave is going to maybe come out in 3 days. And then what are we going to take to do this B wave? Let's bear in mind, one of the observations that most of us know is that a market goes down a lot faster than it goes up. So it goes down in 3. We're going to go back up in a B wave that could take a week or 2. I don't know. We'll work on it when it happens. But it's coming down pretty quick. So yeah, we could get down there on Monday at some point, Tuesday at some point. But in any case, that's what I'm looking for before we get our B wave, and then we get another C wave down, and that's the one I think can bring us down to here. So A can come down to here. We get a B, and then we get the C, brings us down to that 382. And that's my story, and I am going to be sticking to it. Now, again, I am going to put into the description section on YouTube of this particular update the link that takes you to the article. It's by Market Watch. It's a really good article. It really details, concisely puts into play how long it's taken us to put together all of these trade deals that we have around the globe, why they are the way they are, and the fact that our trade deficit against one country is not necessarily a deficit because it has to include other factors, i.e., Apple. Apple, all the iPhones, the iPads, all the products are basically built, put together in China and shipped back into the US. But all of that intelligence, all of that uh, building, that engineering is done here. In fact, it's done about 25, 30 miles from where I live. I live in the center of San Francisco. Silicon Valley is not that far down the peninsula, and that's where Apple's headquarters are. So that's where the brains behind all these products are sitting. The everything, the renewal, all of the new size that we'll get, all of the additions that we get, that's where it's coming from. And those are very high paid people. So part of the price is their work. So it isn't that, you know, China's just overcharging us and all this stuff that we get from this junk that we're now getting. No, that's not true. And it's not just the difference between China and the US in terms of trade. In fact, that we live in a country, folks, where we happen to really like Mercedes, BMWs, Audi. We like a lot of the more upscale cars and how they're built. But let's not forget that these cars, because they're so popular, the government has negotiated to have the factories, the assembly plants built in this country. Toyota, Kia, Hyundai, all of them, Mercedes, BMW, they have this country. Yes, a lot are imported in, but a lot of them are built right here. So part of the trade deals isn't that we're being taken advantage of. We're not. We export back to those countries. We import, we export. So I think that yes, in some cases it does appear to be that way, but read the article. In the meantime, I'm going to wrap this up. Uh, I'm not feeling any strong think like, gee, I'm really worried about the downside. I just hope I can take advantage of it. I'm going to keep my eyes and ears open to what's happening in terms of is it that alternate count? So let's keep that in mind. Please don't let that drift away. Same thing here. If this starts to really come down and starts breaking these levels, remember it cannot break 19,383 because that's where wave four would overlap wave one, no deal. Can't do. That means this all becomes invalidated. And then it's likely that the alternate. Now, am I going to wait that far before calling it? No. Will we start to send out signals like, let's be leery, be careful, be careful. We're going to get warnings. And a lot of it will be in how strong this decline can get beyond how I'm counting it. All right. That will be it. Our next update, along with the updated spot gamma levels, will be on Monday morning.